Welcome to the weekly review of the markets from Hernandez Retirement Services. This is Agustin Hernandez. This week I will focus on the results of the S&P 500 Index and the 10-year U.S. Treasury note for the week ending 12/21/18. I will also go over a couple of assets that may be signaling the beginning of a transition from a true risk-on environment to one of risk-off. And finally, I finish off with what does it mean? Before we begin the charts, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts reference are subjective. No strategy can ensure success or protect against loss. Investing involves risk, including loss of principal. Let's begin. Here we see a chart of the S&P 500 index. Last week was not a good one as the index lost 7.05%. Why did it lose? The Fed, China trade tensions, political turmoil in the US. Well, one of them might be the case, but for all of us, it's all about the charts and what the price action of the asset is. I don't much care for the reasons behind it, but I do care about what the market is telling us. Now, if you see in my previous videos, I have discussed the weakness of the S&P as price has been below its long-term 40-week moving average since September. I have also stressed that another negative was when the 10-week moving average of the S&P crossed below its slower 40-week line, which is called the death cross. Now, last week we were hit with an additional bit of negative news, and that is that the S&P, along with other major US indices, broke their 2018 line of support, which were the lows of the year. Now, does that mean we're about to crash? Not at all. But as I have discussed in previous videos, assets below their 40-week line are in a weakened state, and caution should be taken. In this slide, we go over the 10-year U.S. Treasury note. This week, with the stock markets in turmoil, this index was able to have a gain of 0.5%. Now, more importantly, it has now opened and closed 3 weeks in a row above its 40-week moving average. The key for this asset will be that price stay above the long-term moving average, that the moving average line begins to slope up, and that the quicker 10-week line move above the slower moving average. Now, we are close to all three signals, but until that happens, I still wanted to prove to me that this is real and not just a tease. As the equity markets begin a potential process of more lows, there are other assets that are beginning to wake up and take advantage of the fear. One of those assets is the 10-year U.S. Treasury bond. Now, this asset is more volatile than its cousin, a 10-year note. So the potential for bigger losses are there in downtrends, while also potential bigger gains when it is in an uptrend. Let's look at what this index is telling us. Right now, it is beginning to try and break out. But I must caution, it is still in an early stage where failure can happen. So what do we see? First is that the last 2 weeks price has started and ended above its long-term 40-week moving average. But at the same time, the 40-week line is just beginning to flatten out. Also, the quicker 10-week moving average still has not broken above the slow moving line. And again, this is important as it has failed to get a golden cross in December of 2017 and August of 2018. So patience will be needed, as this index may take several weeks before it can show us if it is in a new uptrend or just faking us out. Another asset that has been associated as a fear traded asset is gold. Now here the gold continuous contract had a positive week and finished 1.35% in the green. Now, unlike US government notes and bonds, this index was in a minor rally from 2017 until May of 2018. Around that time, the Fed was tough on his talk of raising rates and reducing its balance sheet, and gold's nemesis, the US dollar, took off. But now, with the fear that the economy may not be as strong, we see gold beginning to gain strength. Now, this chart shows a very early stage of a potential rally. Yes, price did end the week above its long-term 40-week moving average. But that moving average line is still sloping down. So there will need to be more price strength to get this line to flatten out. Also, the 10-week moving average still needs to cross above the 40-week line to begin a potential new uptrend rally. So gold is beginning to wake up, but still has lots of work to do, and it may face headwinds to prove that it is a worthy contender for a new true rally. What does it mean? Not to beat a dead horse, but I must restate once more, I am not a fan of any asset below its 40-week moving average. Now, I will acknowledge it is not a perfect indicator, but for me it serves as a baseline. It lets me know what the market thinks of the index or asset. Couple that with the 10-week slicing below it and the 40-week line sloping down, the possibility of a harsh drop increases. For now, I can see several attempts by stock markets to rally. Now here is where one will need to be careful. These rallies can lead to failure to break the downtrend and lead to lower lows. The equity markets have been breaking down for quite some time, and it will take some time to get back into a new bullish trend. As of now, we are not in crash mode. In fact, we are in a correction. What does it even mean? Nothing. I am not a fan of the term, but I guess we must name a pullback. It is a correction until it is not. Treasury notes and bonds are developing a story of a possible transition from risk on to risk off. As of now, it is just beginning the story, but it is not complete. It still has more to go. Equity traders need to be cautious here. A rally anytime soon does not mean the end of the downtrend. We need to let the story play out. I would like to thank you for viewing this video and I hope it was helpful. Please subscribe to my channel for future videos.